Hello everyone, welcome to tonight. I'm actually a minute late logging in because I just couldn't get that camera quite right on the recording here, but we're all set to go. Welcome to tonight. What is consistent trading? For those of you that are new, again, I'm just going to give a quick hello. Every once in a while I give you a more extended introduction to me if you don't know me. There's always new people at DTS. About every other week, sometimes every third week, I do a event. It's usually traditionally been on Wednesday, although it does not have to be. These events are recorded. A couple of people asked me about the last event because I made a little note on tonight's event saying that, last week was probably to me one of the more important ones, even though it probably wasn't one of the more popular ones. They're not always consistent. What people want to hear and what they should hear is not always the same. But I got some questions where, if you missed that, where could you see it? Most of you should know this, but everything, all these Wednesday events, these special events, the educational events, they're all recorded, and since the beginning of time, they have been on the free stuff page, which is right there. And that is what I consider to be the best collection of information anywhere on the internet about trading. You can certainly find more useless information, but not more great information. So if you haven't been there in a while, check it out. There's a lot of sections. You can watch the videos there, or there's also on YouTube, the DTS YouTube site is a mirrored image of what is there. On YouTube, of course, you get encouraged to go to the next video, from somewhere else. So if you want to do that, that's fine. If you prefer to get all these videos from the DTS site, then do that, okay? So with all that, let's get going for tonight, because as usual, I have a full boat of slides here. It's 5 after 5, 6 after 5. What is consistent trading? Let's get right into it for tonight. You should be seeing the slide, correct? You are, because I'm logged in also and I see it. What is consistent trading? It occurred to me I might be occasionally saying something misleads people, so I'll address that tonight. It's on one of the slides. You can read the rest of that. We're going to go through it, so I'm not going to read that here. A disciplined approach. Well, that's true. That's true. But I think there's some specific points here, Carmen, that as I got into this, it really became a great topic to me. And I probably say that about half the presentations I do, but it really became a great topic for me because it's one of those areas that I think is a little misconstrued. And we're going to look at some results, some charts tonight. I think it becomes a really good topic, especially for people in that stage where they're trying to learn and they can't get the final pieces put together. So consistent trading. Let's start off with this. Let me ask all of you, how would you define consistent trading? Or in other words, to get a more specific question to you, list some things that you would consider to be consistent with trading consistently. Paul, you have an excellent point. I guess somewhere in here it should say a consistently good trader. I think the word good is implied, but you have a mildly humorous and point taken point. Okay, following a training. Okay, that's good. That's good. Profitable in all markets. Okay. Following your plan, entries and exits. Okay. I see you guys are going to be a difficult group here because you really have some good answers right out of the gates there. Good money risk management. All right. Well, we're going to go through a few slides here, and I'm going to ask you what you think of some of these topics as we go through here. And yes, this is going to, include some answers, if you will. Naturally, some of the answers to trading, if you want to get an answer in a 1-hour seminar, some of the answers are kind of what you call, esoteric. They're not necessarily going to have you making money tomorrow. But when you put it all together, I think it becomes a great series of topics here. So, yeah, rigid rules, flexible expectation is kind of addressed in here, Mark. That's a good one. So let's take a look here. One of the reasons that this topic kind of comes true to me is because I get questions like this, which to some of you may be slightly funny, and to some of you maybe they're real questions because maybe you've thought about them or asked them. But sometimes I'll get an email from a newer person in the room. When I say the room, for those of you who don't know, at DTS, I do a lot of free events. I give a ton of free information, but I also have a subscription-based trading room that we do during the trading day. And besides the trading room, I also have letters for long-term type traders, and of course a seminar program. But so when I say the room, I'm talking about members in the trading room. But sometimes a newer member will send me an email afterwards and ask questions like this. These are exact questions I've actually received. Paul, we were bored yesterday, And today there were 3 trades in 30 minutes. Can't you space them out better? What do you think about that? I took a day off yesterday and you made the whole week's goal. Can't you spread that out so it doesn't matter if you miss a day? What do you think about that? Well, keep in mind, you're all here at a variety of different levels. You're all at a variety of different levels, and for some of you maybe you can remember back to maybe these are realistic questions. Um, I think I am have been good at communicating and teaching people because I came like any one of you. I was never a part of Wall Street or anything to do with a market, and actually people who are from Wall Street have a huge disadvantage, believe it or not, day trading. Brokers and even market makers, they have a tough time day trading. So it's best to have no experience. But just coming up through the ranks, I remember a lot of the things and the thoughts and the misconceptions that you have. And it's not far off to think this way. It's kind of like you want this to be more like a precise job where it's just very routine and regular and all very rigid and all very objective, which is what we try to make it, but it's not always, right? Yeah, exactly, Paul. Yeah. I took a day off yesterday. Well, where do I get my check for that? Who sends me the check? But these are real questions that I get, and naturally, it maybe gets you thinking in the right way about what I'm trying to get to here. So let me ask you a couple of questions. We're going to get to some hard stuff here in a minute, but let me ask you this because I think there's some good points here. What do you say about these 2 days of trading? Here's Monday, and here's Tuesday. And we're talking about, because we have to have numbers on here. Let's say this person has a $500 risk amount. In other words, and we're kind of looking here. This applies to any trading style, any time frame, long term, short term, it doesn't matter. But let's just say we're day trading here. It's a $500 risk, meaning every trade you're risking $500. If you lose on that trade, you will be losing $500. Here's Monday and Tuesday. Monday made 200, 150, 50, 100, minus 200, made $300. Tuesday, full loss, full loss, full loss, 2,300, made $300 on both days. What do we say though about these 2 days? And remember, the topic tonight is consistency. Market is consistent. What do you think about these? Which one do you prefer? Do you think one is more consistent than the other? Do you think one is better than the other? Do you prefer one over the other? Do you think one of these traders is a good trader, or if it's different traders, is one trader a good trader, one trader a bad trader? Monday the trader felt good. You'd rather be the Monday trader? Keep going with the comments. I think, and again, I put slides like this to get you thinking, because when you fully understand the question, you better understand the answer. And some of you may be way ahead of me and already know all this stuff, and that's great. I'm sure you just like tuning in and listening to my voice. But well, he made $300 both days, right? See a bunch of people typing. Let's get the rest of the answers here. Risk stopped at 500 and the profit ran on one trade. Okay. Gary, good comment, Gary. It's not about feelings. You're absolutely right. And actually, in other presentations, I've actually given you the scenario about why trading can be so deadly, because I've actually proven to people that they would rather feel good than make money. And it's true. A lot of people would rather feel good than make money. In other words, there's a lot of people that if I asked the question directly, they wouldn't admit it. But if I backed into the question, if Monday, let's say the Monday profit was $200, there's a lot of people that would rather have Monday than Tuesday, even though Monday made less money, right? Somebody got lucky on Tuesday. That's one way of looking at it. Of course, we don't know if he got lucky. Well, let's talk about that. There's two ways to look at Tuesday, right? Here's a trader that just losing trade, losing trade, losing trade, takes another trade, and his wife calls him to run to the store. He comes back from the store, and the stock just blasted off, and he has a huge profit. Okay, right? Lucky trader, right? He got lucky, right? But how about another concept of looking at this? How about a trader that says, you know what, I'm going to sneak in here on some little chart, and I'm going to find, can I draw here? I'm going to find this big picture buy setup, and I'm going to come in here and just find this little tiny entry. I'm just going to take a chance that thing runs right from my little entry. It's going to be a 5 hour trade. and he tries it once and it fails and he gets out like he's supposed to. He tries it again, it fails, he gets out. Gets out. Boom! Home run. He takes the full profit and makes his day. Is that a good trader or a bad trader? It's a real good trader. It's an excellent trader. Yeah. Let me ask you a question, and then I want to make a comment that you may not like. Go back to the title of the slide here. Let me ask you this. You all gave me comments about good, bad, don't like, feel good, don't feel good, whatever it is. But how about this one? Let me erase that stuff there. Which is Monday or Tuesday? Which do you feel is more consistent? Monday, Tuesday, both or neither? Tuesday, Monday, can be both. Tuesday doesn't look like he followed his rules on Monday. What's wrong with Monday? Matter of fact, Monday you could argue $200 loss was the max loss. Here he has a string of $500 losses. Is that less consistent? More consistent? there's the mathematician, the statistician, always hard with limited data sets. Actually, you're kind of right though, Eric, because nobody really got the A plus answer. There are a couple of B answers in there, but there's no A plus answer. The A plus answer is the information is not on this slide to say who's consistent. Because I just explained to you, this guy here could be the best trader in the universe. He really could be. We don't know. Let me give you a comment you're not going to like. And that is just knowing and teaching this for a long time and seeing traders come through. The odds are that this trader is more likely to be successful. Now, I know I'm basing that on 5 numbers on the screen, and obviously, but I mean that mentality. In other words, this is the person. If you're risking 500 bucks, and if this is what you do all the time, you're going to bleed to death eventually, because you never really rack up the winners. You're just a constant. When you have a string of constant small winners and small losers, you just bleed to death. That's what you typically do. Now, this person here is either going to, if he's a new trader, he may be reckless and he may bomb out. But if he's developed a style, this is the more consistent winning trader usually. And I know a lot of you may not like to hear that, but you know what? I think a lot of you realize that when you type some of your answers. I could tell by your answer, right, that you were kind of saying, that's not me, but I wish it was, right? That's what some of you seem to be saying a little bit, yeah. Right, yeah, a lot of you kind of hinted that way. So I want you to keep that in mind. There's a little lesson. Let me go to another slide that's maybe a little bit more obvious, for lack of a better term, of a answer. What would you say about these days management in terms of risk amount $500 in terms of consistency again? And you can see here Monday we're risking $500, right? You have an arrow there. Monday made 500, lost 700, lost 700, plus 23 minus 1, minus 5, minus 5, minus 5, plus 20 minus 7. Do we now have anything to say about consistency? Tuesday's looking good now. One didn't follow the plan. You like Monday better. Boy, we're all over the place here. Tuesday is consistent. And why is that consistent, Carmen? I think I know what you're going to say. Monday, okay, because you're going to say what Gary said, or that somebody said that Monday didn't follow the plan. Okay. What if, you ready for this one now? What if the person on Monday, what if part of their plan was to let a stop expand a little bit once in a while within certain parameters? Does that change your answer now? In other words, what if his plan was that 500 was the baseline, but under certain situations, he could increase that 50%? Eric actually said that he thought Monday was the better trader. But the point is, does that bring him back to being consistent? In other words, he was following an absolute hard, fast rule that allowed him to do that. Would he be back in the consistent category again? As a matter of fact, what if this 500 loss this day was a $500 loss, but because he gave it room to 700, it came back to being only a $100 loss. In other words, he made $400 doing that, which balanced out the 400 he lost up here. You see what I'm saying? So you're starting to get at my point about what consistency is. in that it's not necessarily at all having to do with the numbers on the screen in front of you, correct? And that's going to become so extremely important in just a second. Does that make sense to you though so far, what I'm saying? You don't have to agree, but does it make sense at least what I'm saying? That's what I always say to people is you don't have to agree, but at least you understand what I'm saying. Because it gets kind of even more fun in a sense in my view. Because again, what I feel personally without a question, and what the vast majority of successful traders, and again, this this next slide will be about a day trading thing. Yeah, we're gonna get there, Carmen. But for me, it's always been this, and for most successful traders I talk to, they feel the same way, that a typical winning day trading week, a good day trading week consists of this: a small winning day, a small losing day, a big winning day, a nice winning day, and a losing day. And by the way, Monday through Friday is no relevance. I don't mean, you understand there, I don't mean that Monday has to be the winning day. Obviously, it's whatever day it is. But I mean, in a 5-day week, you typically will have a really nice day that makes the bulk of the week, another nice winning, another okay winning day, and then maybe a losing day. You just can't help that, a small losing day, a small winning day. And something that, again, will escape a lot of people because you don't realize it, that the problem with most traders, well, let me ask you, out of these days that I have listed here, what is the problem for most newer traders, or for losing traders? I mean, I shouldn't say newer. What is the problem day? Is it not getting the winning day? Is it getting too big of a losing day? Is it getting not properly handling the small winning and losing days? The small winning and losing days, by the way, just kind of always have called in a jovial manner the McDonald's days. Well, the immediate answer, and some of you are saying, is controlling the large losing days. And you're absolutely right, Mike, you're absolutely right. In the beginning, traders will rack up a big losing day. And even later on, you may do it occasionally. Anything can happen once a quarter, once every 6 months, whatever. It's not going to kill you as long as you know it's under control to some extent. But the thing is, though, with the losing days, though, guys, at the end of a really bad losing day, are you aware of the problem? Are you aware of the problem? You get this big punch in the stomach at the end of the day, and you gave back a week's, yeah. Or I mean, it's glaring, and it's something that you simply have to fix, right? Or you can't go on. So you're right in the sense that initially big losing days are the problems, right? But it's not really the killer problem, right? It's not really the killer problem, because you have to fix it. You just see that it's a glaring thing you can't miss, right? And believe it or not, even newer traders tend to have some nice big winning days. Maybe not a lot of them, but they have them. The real cancer on the screen for most people, believe it or not, are the small winning and losing days. See, type a 1 on the screen if at some point you agree with me. And the problem is that you're not happy because you just made a little bit of money, or you're not happy to close down a little bit, right? So you try to fix it. You try to take that small losing day and make it green, but now you're pushing it. Or you're not happy just being up a little bit, and you think, okay, I'll push this into something more. And the real point of what I'm trying to get across here today, and again, this applies long term too. The point is that you can't force these trades. You can't say, I want to be consistent and make X dollars every day, because it's not on the charts. We're going to get to that in the next slide, so I don't want to get too far ahead here. But it's these days where you're supposed to be happy going out at a small loss. And the problem is, you know what? You oftentimes don't realize that's the problem, because it ends up being a bigger losing day and you just think you're a bad trader. But if you could go back and replay and have somebody coach you and guide you and say, hey, look what you did here. This day you did okay. You were down a few dollars, but you know what? You never had your hand on the day. You never handled it right. You never had the stuff in front of you. You know what? You got out of it for free. That's a great job. But look what you did to it. You made it a triple day losing day, right? That's where the problem comes in. People are not happy with a small losing day, and sometimes you have to be. Case in point, and the last 2 weeks is perfect for this demonstration because I have examples all over the place. I today, and I know some of you may think, boy, big day up in the market, I killed it. I hate days like today. It's my worst trading day. So I would never had the best stuff on the screen. And to the extent I had two great trades, and you know what? I did not manage them right. I had two really nice winners. I only made one R out of each one. And it really wasn't, I look back after the market and it really wasn't my fault so much. I just got pennied out. Every time I tried to get something higher and I just set a little trail somewhere, it immediately took it out and went higher. So I just was a little frustrated and didn't have the right, and I went out with a small loss today. I think it was a half loss, or just a half hour loss, or maybe a little more than that. But I'm thrilled with that. I realized that today. You know what? I never had the rest of the week was great, but I just didn't have my hands on it. So I'm very happy to do that. Come back tomorrow, and I'll end up over the goal for the week. I think I was over the goal going into today. So you just got to be happy with that, and you got to acknowledge that. And to do that, though, you have to have the knowledge and confidence about what you're looking at to assess the odds and say, you know what, it's just not on the screen in front of me today. It doesn't mean you have to immediately quit, but you just have to understand, you know what, if I'm not making it my first trade or two, let's just shut down and just say, okay, let's just wait for better times. Okay. Yeah, Gary, we're going to talk about that actually. That's coming up on a slide as well. You guys have some great comments because you're hitting a lot of the things here. So think about this way. So here's what this brings us to, all of this. And by the way, it says typical, not everybody's like this necessarily. You don't have to be. I'm just saying most people are. I am very much. So how can you say inconsistent results is not inconsistent trading? Well, let's start with this. The only way that all trade outcomes would be the same, or every day would be the same, is if every trading day or every stock Forex future setup was the same. But they are not. Every one is like a fingerprint. They are never the same. Do you guys agree with that? Every setup on every stock, future, Forex, every day is different. It's unique as a fingerprint. There's no duplicates of anything. Now, sure, we look for strategies that are extremely similar, that are a pattern, that are common, that we see, but it's never identical, right? Just like you can see two people on the street and confuse them because they look similar, but to that person's husband or wife, they're not the same person. They're obviously different, right? So it's obvious that consistency can't be based just on results. As a matter of fact, one of the biggest trading demons is requiring the always different market to conform to what we expect. You cannot force a good day when the setups are not there. Are the setups that really different day to day? Absolutely. Absolutely they are. So what are the setups? What are we talking about setups being different day to day? Well, these are your strategies in a sense. They are what you require to see in order to take a trade in the simplest definition, right? You look at a screen, you're looking at charts, you look at a whole bunch of charts, and you're deciding what is it I need to see, number one, to get my interest, number two, to require me to find some kind of entry, and for number three, to push that button and actually take this trade. What has to happen? There are many correct ways to trade. There are also many incorrect ways to trade. Good trading is technically based, period. Everything, if you don't know me, there's only one way to trade, and that's technical analysis is all that there is. Nothing else is helpful, and that's something that I discuss if you're new at the Introduction to Mastering Technical Analysis class, which everyone's invited to, and everyone here will be invited to that. The next one's coming up, I think, it's actually 2 weeks from tomorrow, 2 weeks from Friday. So you'll get invites to those if you got an invite to this. In essence, you actually can reduce your setups and everything you do in your trading to following. You can reduce everything you do to following a set of rules. Everything that you do. What are those sets of rules? What do we have to look at? Consistency means only one thing in trading. Here's the answer. Consistency in following your rules. Rules in the broadest sense, including rules to identify setups. Okay, when I go scanning and I'm going to look and get prepared for the next day for day trading, or for the next upcoming days for long-term investing, I'm going to go through a bunch of charts, and there is something I need to see. It's what's naturally, it's whatever you feel your setups are, whatever you've learned, wherever you've learned them. For my students is what I teach in class, what we look for specifically across 4 time frames typically to find exactly what it was that makes it a potential, something that maybe could be someday grow into an actual trade. Right now it's something that we're interested in. So number one, rules to identify potential setups. Then number two, rules for the entry. Once you have a setup, that's nice. Here's this chart laying in front of you and you like it, but how do you actually decide, okay, now I'm buying it? What is that decision point that happens for you that makes you say all of a sudden, okay, boom. Entries to me, as many of you know if you haven't heard me, are just the most important thing, the most critical thing. Entries to me are a tool that are on top of and in addition to any strategies or setups. And some of you don't even know what I mean by that, but if you have learned strategies and the strategies as some kind of entry part and parcel with the strategy, you're probably losing money, to be honest with you, because you're giving up one of the greatest tools that you have, and that is to superimpose different types of entries on top of your setup, depending upon what you need to see from that setup. And to me, it gives you one of the greatest advantages. So there are specific rules for entries that you have to have. Rules for stopping. I know in one sense, in the most simplistic sense, you say, okay, here's my chart, here's where my stop is, and when I hit it, I'll get out. That's not good enough. You need additional rules in my mind. Rules for stopping are one of the most profitable things you can do in terms of managing a stop and understanding what to do in certain situations and having the record keeping to justify what you're doing. Rules to manage to the target. In other words, this is what we typically think of management is I got in the stock and I want to get it to move 70 cents. How do I get it to that target without getting out too soon? How do I hit that balance between protecting profits, right, and getting to that big target I want? If I get to that target, I make half a week's goal. But if it goes part of the way there and then backs up, it's a full stop. Anybody ever have that dilemma? I'm just curious. You ever have that dilemma? Gee, if I let it go, I'll make a half week's profits, but gee, if it backs up on me, I'm gonna have a stop. And I was green and now it's gonna stop out. I was up $200, now I'm taking a loss on it. That's insane. I can't do that. This is the number one people everybody. I was sarcastic when I asked if anybody had that dilemma because that's a dilemma everybody goes through every day, whether you're swing trading, long-term trading, or day trading, it doesn't matter. It's a dilemma everybody has. And by the way, given the choice between giving something the time and room to get to a target and getting super tight in managing it and getting out with some profit, what do most traders want to do, A or B? A, get it to that big target by giving it room, or B, take some money and run because you can't go broke taking a profit. And 95% of you will favor B. I actually talked to somebody the other day, a rare phone call, but he was actually an A type person. Very rare, very rare. I mean, I don't even think it's 5%. And that comes from that need that we all have to simply not be a loser. Because if you have profit in a trade, you're a winner. And if it goes negative, you're a loser. At least that's what your subconscious is telling you. So anytime you're green, you don't want to see that green go away. And we're very tight to protect it. Even though most of you, if you are a decent trader, doing that, I'll give you a 90% chance you're hurting yourself, even though you may not realize it or ever change it. Rules about money management, right? You will never be successful if you don't have money management rules. And finally, rules to where to go? Rules of follow-up procedures. You can never get better if you don't verify what you just did and whether it was the right thing to do or not. And if you even did what you're supposed to do, right? So these are the rules which define consistency in trading. So if you go back to that prior statement and add a rules, it would simply read like this. And this is the way it was originally written, but I didn't want to put that out there ahead of time because it kind of gives away where we are. If you follow your rules, the only way that all trade outcomes would be the same is if every day were the same. If every trading day, every stock, every Forex future setup was the same. But they're not. Everyone is like a fingerprint. They're never the same. This means that applying the same standards to trading means that some days you may have nothing to do. The next day you may have more trades than your account allows you to take. That's just the way it is. Now, what are the good days? What are the bad days? What are the good setups? What are the bad setups? Well, that varies very much from person to person. I'll get to that in just a second as well. Something I wanted to clear up, and I've tried to change the wording anywhere. I've never intended the wrong wording to be in somebody's mind, but I've always said, and there's a whole video about this, that As a day trader, you want to make an hour a day. And the implication, of course, always was when I talked about this, but that was to average an hour a day, to average getting 5 hours a week. My point was simply that you don't keep your risk unit really small and try and make multiple hours every day, because you can't do that. So rather you build confidence. I'm not going to go through that whole thing because that whole talk is in this video here, From Chart Reader to Trader Investor. One of my favorite, and by the way, thank you all that voted for the Hall of Fame videos. The results are in, and there will be a section added to the DTS homepage or to the DTS Free Stuff page and to the YouTube page. Most of you don't care because you've already seen all these, but you did a service to me by allowing some new people to who come to the site to maybe start with some favorites rather than going through the very many videos. But if you want to listen to this one, it is to me, one of the absolute favorites, From Chart Reader to Trader Investor. It talks about this whole topic. And that's actually on the archive page. Every page of videos has an archive page. And that's actually on the archive page. You'll see it there. So averaging an hour a day is a big difference. And I want to make sure nobody ever has the impression that I think you're supposed to sit there until you get your hour a day. It means you're simply supposed to average that. That means, like I showed you on the prior slides, it means some days you may have a small loss and some days you're going to rake in the whole week's worth of profits. That's the way it typically goes, and it's the way I think that it should go. The biggest issue, bar none, absolutely no question about it. Few can tell you when they have their setup. And this is the issue, is what do you mean by the setup? What is it? What is the setup I'm looking for? We're talking about, the strategies, everything we just talked about. The strategy, the entry, all these things. What exactly is the setup? Well, there is no unique one setup. You learn charts, and there are a variety of things you can do. A great story that I like, there's a book out there, it's now at this point an older book. It's called New Market Wizards by Jack Schwager. And it's a book that I don't think you have to read. I don't think you'll learn a ton from it, but there are two great points that came out of the book that I think as a teacher of this, I really like to pound home on. And one of the big points here to me was that Jack Schwager, who was the author of this book, he was not a trader. I think he was a behavior psychologist or something. And he went out, he wanted to make money in the market by not learning the market at all, but rather to interview 25 successful traders who were all technical, and to find out the common thing they did. He figured, what a great thing. Here's 25 traders. They're all making money. I'll just find out what they do on the charts, and I'll duplicate it. What was the technical setup that they all had, that they all did, everybody? Anybody read the book or heard me talk about this before? What was the technical thing they had in common? Is it a certain breakout, certain time of the day, some pullbacks? Yeah, nothing. He was shocked. Yeah, they had nothing in common. The only thing they had in common wasn't a technical concept, it was a mental concept. They all had the patience to wait for their one thing that they loved. The one thing they loved was all different. And why is that, if charts are supposed to be so objective as compared to other methods of making money? Why is it that this varies so much? Well, it's really simple. Technical analysis, objective, isn't that the whole idea? Well, actually, it's not totally objective. Traders come to the market initially, day one, being 100% subjective. They're subjective. In other words, they look at a chart or they listen to the news and they go, oh, well, that stock can't go any higher. It's got to be a short. And oh, that stock can't fall anymore. And oh, gee, that was really good news. It's got to be worth more than what the market's paying for it. I mean, after all, I know more than 220 million other people do right now. And this is the way people look at things initially. And your goal, becoming a technical trader, is to become as objective as possible. However, there's a limit. You cannot ever become totally objective. There's always going to be some subjectivity. It's what makes a market. If you think about it, I read this article once and I lost it. I wish I hung on to it, but it was just one of these mathematical types just stating how it would be impossible for the market to be objective, because it would mean that there would be a single uniform process or system making money, and there can't be such a thing, because for every winner there's a what? It's the most common sense thing. For every winner there's a what in the market? There's a loser, right? So we can't all win. Therefore, there's subjectivity, right? Just think about it. It's absolute common sense. By the way, that's the topic of an upcoming presentation, is going to be common sense. I thought of so many things where I don't have to try and convince you of something, because it's just the common sense of a human being should make you understand some things about trading. And that's one of them. You know, there can't be total objectivity. There can't be some magical computer system software that's going to work, because if we all used it, it's like me saying, hey, you guys, Eric, Dean, Carmen, come on over to my house. We're going to have a poker game, and I have this great new game. You're going to love it because nobody loses. We all walk away winners. Well, it can't happen. Somebody's got to be the loser. So it's what makes a market. Here, I was going to actually set up a poll in the room, and I didn't have time. I ended up kind of busy today and never got to it. But I was going to actually poll you guys. But let me just do a poll in the room. We don't have to do an official poll like where you click on a thing. But let me just ask you guys. I'll give you one of the reasons why you can't just have this one strategic concept that we all love. All of you right now, if you've been trading, if you've taken any trades at all, if you've looked at a chart and you've taken a trade, and I've got to assume most of you listening to me are in that category, you probably have an inherent deep down, or maybe not deep down, conscious or subconscious desire to either take breakout type of trades or pullback type of trades. Something where you're like at relative all highs, boom, or some of you like to take something where you've pulled back, so you're getting it in the basement. Tell me, breakout or pullback, BO or PB, what do you like? Go ahead and watch the results, everybody. BO or PB, what's your favorite? I'm not saying it's the only thing you do. I'm saying if you had to pick one, what do you like? Oh, come on, you don't all like pullbacks. You guys are crazy. You are nuts. What are you doing? What are you doing? No, you got to pick one. There's a breakout. Okay, come on. Typically, seriously, this is usually 50%. This is like 50-50. I think the more, well, I don't want to say that. It's 50, and they're both legit strategies. There's nothing wrong with them. I, to some extent, do a little bit of both. But I mean, in your gut, where are you most comfortable is what I'm saying. You know, do you want to make sure that there's nothing off to the left, that there's no positive, because for some reason you think if there's anything to the left, you're going to get squashed? Or would you rather, or do you think you're buying at, you know, extremely high prices, and you'd rather get wholesale down in the basement? You know, everybody has a gut, and you can see you all have differences of opinion about that. How about this? For those of you that day trade, that's not a 25-minute chart. It's supposed to be a 2/5. Type a number on the screen. What chart do you like to live on, and interpret live on any way you want? I don't care. A 1, 2, 5, 15, 30, 60. What's your chart to live on? 3? Yeah, any number you want. Go ahead. 3, 60, 5. You see where I'm going with this? 2, 15, 5. You get where I'm going? Right? Let's do a couple more, because you'll get the idea. Even more. What do you prefer trading, everybody? The first 30 minutes of the day, if you're day trading, the first 30 minutes of the day, the first 90 minutes of the day, only during lunch, only in the afternoon? What's your favorite time? Don't worry about it, it's all right. Pre-market, first 90 minutes, first hour, 90 morning. A lot of you are going to be biased that way, because that's my favorite time. But we all, you know, some people, I've talked to people that they've heard somewhere that the first 30 minutes of the day is for suckers. I mean, that's just a stupid comment. Because if somebody's a sucker, what's the other side of the equation for sucker? It's making money, right? Yeah, somebody's making money off the sucker. So there's no such thing as a bad time, right? It's just a matter of how you look at things. Let me ask you this one. Here's another big one. Your answer is either going to be what's it going to be? HR for home run or small profit. Would you rather, if you have a setup and you got two choices, you either can take this really tight little stop and it's going to make a ton of money, but you may have to replay it 3 times. So you take a loss, and then you get it right. Or would you rather just like kind of give it some room and just get in once but not make as much money? Do you go for the home run or the small profit? What do you like better? Go ahead, go. Most people will be small profit here, but go ahead, go. Home run or small profit? Remember, the home run means you got to take it 2-3 times. 3 times you used to go for small ones. Okay, good. Good, Larry. Home run, small. Okay. So you can see, look at the variety of answers you all gave. You put all these answers together, How can there possibly be a strategy where we're all sitting there looking at the screen? So again, what I teach is the language of charts, meaning that you pick up any chart and you can understand what's going on. Now remember, even with all that knowledge, even if you're the best chart reader in the world, to me, in the world according to me, 97% of the time you should take that chart and do what with it? That's true, Carmen. Yeah, I'm asking just mental preferences. What should you do 97, no matter how good of a chart reader you are, what should you do 97% of the time when you look at a chart? You look at a chart, you say, I understand everything on this chart, and you just say, I'm still going to skip it, right? I don't care. I understand it. I understand what trend it's in. I understand if this, it might do that, and if that, it might do this. But you know what? It's just crap. I don't want to look at it anymore. Give me another chart. That's the way you should do things. Boom, boom, boom. There we go. All right. So what's our next slide? I don't even know what the next slide is. I can't wait to see it. Oh, okay. So you know what's funny is some of you that know me, this thing about the McDonald's days, right? Somebody just testified for me. I've said this millions of times in the past, right? This exact thing, right? Yes, somebody? I didn't just invent this tonight. I've been saying this for years, right? Big winning day, losing day, small winning day, small losing day, right? So what was funny was I said, okay, fine, I'm going to go ahead and throw up last week, but this is my typical week. When I have a decent week, it almost always goes this way. And I want you to look at how this conforms. What was funny was it almost matched the days, but I had to switch them around a little bit. This is last week. This is my results last week in the trading room. This is everybody in the trading room. They have all these results. They're sitting there. It's what we do every day. Monday, I remember Monday and Tuesday both. I had one trade I liked in the morning. It worked. Tried a couple other things, had a hard time. Small losing day, Monday, Tuesday. Wednesday, boom, big winning day, exceptionally big, over 5 hours, whole week in one day. Thursday, exceptionally nice for a second winning day. Friday, small winning day. That's exactly the setup I gave you. That is a very, very typical thing. It's extremely rare. I mean, the only time that I probably am real consistent day to day, if I'm kind of struggling day to day. You know, like every day is just like a half-hour winner or something because I just can't get anything going. But on any good week, it typically you explode with a day like this. And I think it's actually back here. I thought about doing this for tonight because somebody was asking me on Wednesday. They're like, hey, you know, I missed a couple of the good ones Wednesday, and you know, why didn't you have those on Monday? Well, I didn't have Monday because the charts didn't give them to me. It's not me. It's not that I just fell asleep or I didn't know what to do. The charts didn't offer me what I wanted. Now, again, understand. Yes, good, good answer, Gary. There's Gary said take Monday and Tuesday off. Just start on Wednesday and call it a week. Of course, next week, of course, Monday may be my biggest day, so obviously it doesn't work. But you see, the point is that the charts give you what they do, but keep in mind that what I think is a great day, you may not think is a great day. I have no doubt some of you maybe killed it today, you know, but you have to have the right bias going into the day and the right bias on the setups. It's something I talked about in the room a couple days ago. It's like there are some trades once in a while where I've, you know, a long time ago I came to the conclusion I just can't do them because, like, for me to buy a pullback, I have to love the area it's going into. I have the confidence to say, you know what, it will not go much lower than that. But here's the problem: if something is coming and I'm not sure about where the area is, I can't get confident about taking it because I don't know where it's going to end. So there are some times where I just can't do the trade. And of course, if you say, well, wait for it to be strong, well, by the time it's strong, it's gone. See, I have this very fine line between, you know, I'm not confident with it and boom, now it's gone. You know, I have to be able to get the great entry. And to do that, I have to have confidence. And I can't always have confidence in some of the setups because they're just not there. I'm sorry, DT. It is recorded, and you can, yeah, you can look at it when the recording hits. I'm when I teach, actually, I do talk very slow in the seminar program and that stuff. On nights like tonight, I try and go slow for people, but I've just a little too much to do here because I do like it done in the hour so people can feel confident that we're going to be done and move on. So yeah. Well, I don't like keeping people here forever. I like to know that, you know, 60, 65 minutes we're typically done, which we usually are. Notice the, you know, I did that without even looking it up. Consistent trading, waiting when there is nada que hacer. And for those of you who have never been south of the border, that means nothing to do. Right? Did I do that right? Nothing to do. Thought I'd bring a little Spanish influence into the day since you're very close to Cinco de Mayo. De Mayo, sorry. One of the biggest no-nos. Looking back at all the woulda, coulda, shouldas. I joke about this in the room sometimes. It's when you have a chart or a setup and you are gonna do it and you have it loaded and you're ready to go and it just kind of gets away from you by a few cents, or you're like, okay, I don't mind saying, okay, I missed that one, but this can also be a real problem. And actually, this was a DTS trading tip. I sent these are on the free stuff page, but I send these around from time to time. I haven't sent one in a little while. But one of the quick hit trading tips is everyone has a pile of woulda, coulda, shouldas. You have to get better than having a great watch list and then not making money from it. It's just become a little bit of a peeve of mine. Everybody always talking about all the woulda, coulda, shouldas. We all have woulda, coulda, shouldas, right? Right, everyone? Thanks, Paul. Right? Agree, everybody? If you're day trading, at the end of the day, you can look back at your screen and you can give yourself a pat on the back all the way until dinner time with all the woulda, coulda, shouldas that you could have done, right? But you know what makes just a rank amateur from a decent trader is the person that takes the woulda, coulda, shouldas and makes money from them, not complains about them, right? Right. Right, Mark, exactly. And that's what I always say. Well, the next slide, right here, it promotes FOMO. Anybody know what FOMO is? It has nothing to do with foaming at the mouth. Anybody know what FOMO is? Yeah, fear of missing out, right? It's one of the worst things in trading for people. And that's what this big woulda, coulda, shoulda pile does. How do you avoid the FOMOs? Well, number one, you simply just have to not care about missing a trade. You just have to not care. You have to make the decision point. You have to say, you know what, here it is. It either does this for me or doesn't. We're going to look at that on the next couple of slides. All right, we're going to have about 7 or 8 minutes left, I think, here. Consistency in setups. I know a lot of setups. Most I don't use. Ta-da! I have a smaller list of favorite setups that I can use. I have a handful of favorites that are my go-to, my go-to trades, the things that I look for, the ones that I feel the most confidence in. That list of go-to setups can change. It can change from time to time. Why would it change, anybody? Why would your favorite setup, if you have, I have probably 4 favorite type setups, why would they change? And by the way, it doesn't matter what my favorite setups are. It really doesn't matter. Yeah, market conditions, right? Things change. How do you know when market conditions change? Well, because I'm a living, breathing human person. I don't need any special technical knowledge to know that. All I need to do is kind of look at charts, even though I know what they are, and say, boy, things are acting a little differently. Lately we're in a very much momentum market. Things that go high tend to go higher. Things that pull back tend to really pull back further than you'd think a lot of times, right? So you just notice that. It's just something you look at and say, hey, you know what? Let's adjust for that. If you do your normal trade and it kind of stops out 2-3 days in a row, what do? Do you just keep doing it day after day after day and say, well, this is bad? Or do you look at it and say, did something change? Am I doing something wrong, or is something a little different? One of the things, here's a little tip for you. Here's something I noticed 3 months ago, right? If you're buying pullbacks that typically bottomed out at 10 o'clock or 10:30, when do they bottom out now? When does that 10 o'clock to 10:30 bottom typically form on a bullish stock or the top on a bearish stock? Anybody even know? It's as plain as the nose in your face if you watch the charts every day. It happens more like 11 to 12. It's just pushed back an hour or so. 11:30, 12:30, somewhere in there. That's when the bottoms are formed on strong stocks that pull back. They don't bounce quickly. I mean, some do. I mean, of course, everything's unique, but in general, you got to be more patient on pullback type of entries. If you got stopped out of some stuff, you entered at 10 or 10:30, go back and look at the chart. I bet you it bottomed out shortly after you got into it. These are just things that you have to notice. But it all depends on, you're talking about actually taking a trade, right? And you have all these setups that you like. And let's say you have 3 or 4 favorites. Well, whatever setup it is, when you're looking at a particular trade idea, the quality of that particular setup is going to matter. Because remember the fingerprint. Every chart, every trade is going to be a little bit unique. So I may have my favorite setup, right? A mini gap down under a mattress, running back up into the mattress, boom. But you know what? Everyone's a little different. They're not exactly identical. So my first thing is, okay, here's some stocks I like, here's some good setups, but which one has the best quality in terms of the setup and then in terms of the entry, the math. The math, again, another really, I think it's going to make the Hall of Fame. If not, I may vote for one and put it in there. But the three-legged stool event that I did is one of my favorites because it talks about what I think you need to be successful. And one of the concepts is math. And math incorporates the whole reward to risk, but beyond that, anybody can say reward to risk, but it's really the whole concept. Um, it's discussed a lot in the book that I recommend you read by Van Tharp, the Trading Away to Financial Freedom. All those concepts are discussed in there, but the whole math of the trade is a big deal. And it's what I kind of call the moment in time thing. But when you have that setup, I'm just going to be doing it. When everything falls, I'm going to be, even if the setup is a little questionable to me, when I get that moment in time, I'm going to do it because it just works best that way because you make the most money per risk that you're talking about. On that, it's called expectancy in the book by, well, it's kind of called expectancy. It's a little tough to define, but it's basically called expectancy. And if you want to know that book, it's on the other stuff page on the DTS website. Favorite book, favorite movie. Market timing, another thing. Market timing, relative strength, relative weakness. These are other things that we look at to try and find the absolute best, most opportune moment to be taking a trade. Sounds like a lot of stuff. Not really. Try teaching baseball to somebody from another country who never doesn't know what baseball is. You know how long the rule book is for Major League Baseball? I forgot. It's incredibly long. Do you know how teaching baseball to somebody could be like a full year occupation? Most of us just, I mean, anybody who grew up in America and watched some baseball games, we just kind of know most of the rules. But actually, it's extremely complicated. A lot of things are complicated. This isn't any different. It's just a lot of stuff you have to learn, but it's not hard to learn. Most people don't appreciate what you do have to learn. Beyond the conversation, Paul, it's a wide area of supported resistance that's violated in one direction or the other, causing traders to be on the wrong side of the thing there. So what I want to do here for the last 5-10 minutes, rather than look at a whole bunch of trades and just run through them like somebody said, if I go too fast, you're not going to pick on. Let's take a trade from the week I just showed you, and I picked PCG. I didn't think about it long. Most of the trades I do are favorites of mine, or I wouldn't do them. But I thought it was just an interesting one to pick on here because it has some good discussion points on it. So PCG from Thursday, just an average trade. This is not any big winner. I'm not showing off some great winner. There were 7 or 8 trades that blew this away. This is just a nice, very, very consistent type trade for me, something that I have high confidence level in. Why not do only this? Well, I try to, but you don't get this every day, right? Every day is different. When I get this, I take it. So let's take a look at this. This is on last Thursday. That would have been the 25th. It was entered at 9:36 in the morning. It was a long entry, 11:41, stop 11:24, exits, blah, 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 blah. You can see all that. No super trade, just a good trade, but nothing spectacular. Let's take a look. And here's where I'm going to slow up a bit. And I'm going to run a few minutes late. It's going to be about 6:10. As usual, I have too much stuff in here, but I will kind of just try and walk you through the mental process of how this trade came to be, right? From the night before to pushing the button to buy. That's what I want to walk you through here in about 10 minutes. Does that sound like a good plan, everybody? So this is one of the trades, and last week Thursday was the second best day of the week. Doesn't matter. The question is, how does this thing come into be? There's 1,000 stocks out there you could look at, or there's 2,000, or there's 100, or whatever your watch list is to look at. How do you end up saying, boom, that's what I'm going to buy right now at that penny at this second? How do you get to that decision? Now understand, I'm going to run through this in an outline type form. I've always told you the intent is in these presentations is not to teach you to trade. Obviously, it takes more than a 10-minute discussion. But I'm going to run through the whole thought process so that you have kind of built in the framework of what I'm looking at. You may not be able to reproduce it tomorrow because you may see things differently, but I think it's a very helpful process. So this is the 60-minute chart. This is the birth of this stock. This is the birth. This is ground zero for this stock. This is the night before. I scanned 300 hourly charts that are the highest volume stocks. They're my 300 favorite. And they're basically and you've all received this list if you've attended that scanning night. This is the list I use because they're all high volume enough that they're generally very tradable even first thing in the morning, because that's one of the requirements. If I'm going to trade the opening 10 minutes, 30 minutes, I can't get a stock on my screen that I can't get shares, right? That's stupid. So the list I'm going to look at, I want it to be high volume stocks. So PCG is on that list. I scan through the list and I look for certain types of setups. Here's one of those setups that I'd like to see. And that is just this igniting big green bar or bars on the hourly chart. This is my time frame of reference looking for a day trade. This is my time frame of reference. The 60-minute chart is the strategic chart. It's where the strategy I'm looking at must originally arise in the biggest concept. The 60-minute or 15-minute chart, they're kind of very similar. So we have this blast off and this very controlled pullback that's landing in a minor support area that's actually ending with kind of a bigger red bar. Okay. Now, is this a trade at this point? No. This is the night before. This is something I find interesting. In order for this stock to get the call the next day, to get the call up to the big leagues, to become a trade for me, it has to do a lot of other things. First of all, it has to pass the test on 3 other time frames. What do I mean by that? Well, the 60-minute chart is the one that I was focused on as finding the strategy, but then I have to go up and I have to ask the daily chart a question. Daily chart, do you have a problem with this being a long trade? The daily chart may say, yeah, I got a big problem with it, in which case I'd have to trash this stock and say, forget it. The daily chart may say, I love it, or the daily chart may say, I'm okay with it. Why does this daily chart say I'm okay with it? Because at a novice glance, you would simply say we're in a downtrend. What about this daily chart? Give me 2, 3 things on here that makes you say, again, I'm not trading the daily chart. I'm not asking you to okay a swing trade from the daily chart. I'm asking you to say, the question that I ask is, if I'm going to trade the hourly, that daily's got to do something for me. What does it need to do? Or what about this would make me say I'm okay with this? Because the novice view would just say, well, you're in a downtrend, so I don't know what you're doing here. Okay, a higher low, there's one thing. Anything special about the higher low? Chris is saying that right here, that green bar, when it formed, created a higher low based on pivots. Anything else about that make it stand out for you, to make it a okay or not an okay or an exceptionally good daily chart for what I'm doing? Excellent, Chris. It actually is in a type of minor support area. Boom. Very good. That's number 2. Reversal off the low intraday. Well, I'm not sure what you mean, Roy, because we're looking at a daily chart, so I can't see the intraday chart. The daily chart has to give a thumbs up or a thumbs down or say, I really don't care. There's really only one other thing on here that I would point out, and it was reversal from 2 wide range bars. I think the only thing that I would point out here is that this low was set, and then this broke that low, right, and immediately snapped back. The question always is, are we still going to be down? Are there buyers? And all of a sudden, for the first time, when we tried to make this new low, it snapped back. And also, this high really went beyond where you would expect it to. That's not a huge deal, but you're seeing the signs of this thing turning around. That was your comment. Okay, that's why I wasn't sure exactly if that was what you meant. Okay. So the daily chart says, not only will I not negate this, but I'm kind of in favor of it because I just may be transitioning here, right? And don't forget, we just put in at one point the biggest green bar on this entire chart. It pulled back. All right. So I got a 60-minute chart I like. The daily says, okay, I'll take that. I'm okay with that. I didn't, this is kind of capture run because the 5-minute chart should really be looking at the prior day, and we don't see much of the prior day. But the 5-minute chart was really just neutral here. The 5-minute chart was not something I love looking down, looking below the time frame I'm looking at, trying to get a clue as to what's going on. The daily chart really, or the 5-minute chart really didn't. I would have liked to have seen something cleaner to trade from this day. But what I did have was the fact that we had a possible entry type concept from here, and also the fact that I know that this, if we do open above here, this was already in the right area on the hourly chart. So this is the weakest part of this trade to me, was that I wasn't, before the market open, I wasn't 100% convinced that this was going to do what I needed it to do at open here. So if I'm going to take this trade the opening minutes, we're down to a 1-minute chart. It's not that I'm a 1-minute chart trader, but to get the best entry, that's the only thing you can be looking at early in the morning. So here's the 1-minute chart early in the morning. Because the 5-minute chart was not what I wanted to see. Now listen carefully. The 60 was perfect. The daily said okay. The 5-minute chart below did not give me any additional information to make a good, intelligent decision. I waited. So I didn't take it on this first move up. Why? Because it might have moved up to here and then come down to make a lower low on the hourly. Remember that hourly chart? That could go a little bit lower and still be acceptable, right? I don't know what's going to happen. So I actually let it trade and was watching it for some other concept. And that formed a little buy setup. And some of you may say, well, that's a buy setup, so you get in, but the highs of these bars don't really matter to me. What actually happened was right in here, you don't see it, but the stock ran up and then it pulled back pretty hard inside that bar. It got covered up. And then once it pulled back, that was my entry over 1140. So that pulls it all together. And again, what's the topic tonight? It's consistency. And what I'm trying to show you on these slides here is that I am extremely consistent in what I look for my setups across 4 different time frames. I know exactly what I want to see, and I'm highly confident in what I want to do. Now that doesn't mean highly confident doesn't translate to 100% correct, because trading's about odds. Well, without confidence, you really have nothing, because then you can't ever enter a trade properly. Because the problem is, where a lot of people get stuck, let me just ask you, this will be the last thing I ask you, and then there's a closing slide here, but have you ever had the situation where you have some stock that's doing this or something, and it starts to break out, and you go, you know what, I don't want that, I'm chasing it. So you pass the trade. And then it comes down to here, and you go, oh my gosh, now it's too weak. I want to see it prove itself. And then it goes back up. You ever do that, anybody? Where you're just flipping your mind back and forth that, oh, it's too far gone, and oh, now it's too weak, right? And that simply comes from the lack of confidence, because you just don't know what you want to do. See, for me to take this trade, I have to say, you know what? I want that bottom. Give it to me. And you guys in the room, you see me do this every day, right? All the time. Come on down. Come on down. Come on down. Here we go. And boom. And I'm not a second thought about it. I've already decided way ahead of time that's my entry. And if it gives it to me, I'm taking it. I'm not sitting here second guessing myself going, oh, gee, now is it weak? Because then you get in this thing when you always have to see, we need to see strength in the parent time frame to know what we're doing. But if you wait to see strength on the smaller time frame, now the trade's gone. And now you may be more, think it's going to work, but to work to what end? If you're already 3/4 of the way to your target, what's the point of even taking the trade, right? So it's like a 1.5 hour trade. Yeah, because it's 2 targets, so it's a split net. That's it. Okay. So bottom line, and here we go. So I hope this draws us all to a really neat conclusion. I know maybe some of you didn't like how it flowed, but I thought this did a great job talking about what consistency is. It's not that you're consistently making the same dollars every day or necessarily even the same stops every day. It's consistency in what you do in a way that presents itself so that you end up making money at the end of the week, whatever it is. Tips to be consistent. Learn what you are doing. I know that is an easy line to type on a screen, and that involves the whole concept of understanding technical analysis, which quite honestly for most people is always an elusive thing because they never quite get it properly. And you've heard me talk before, about people that say, oh, it doesn't work because they never learn it. They pick up, they buy some manual for $90, they listen to 2 videos, and they try and apply the concepts and say, oh, it doesn't work. Believe me, technical analysis works without any question. But it's about getting odds in your favor. It's not about a certainty, and some people can't handle that. Here's tip number 2, start small and build confidence. That is just such a key word in trading. You have to have confidence every step of the way. And when you start off risking more than you're comfortable losing, you have zero confidence because now you're managing to minimize losses. Slowly increase the risk, which translates to share size. Trade from confidence, not from fear. Trade from confidence, not from fear. That simple statement is huge for most people, right? You need to be telling the charts what's happening. And I don't mean you're stubborn. I mean that you have a plan of what's going to happen. And if that plan fulfills, you're 100% with the trade doing it properly. If it doesn't do what you want it to do, you're never in the trade in the first place. But not from fear. You don't let the charts dictate what's going to happen. You don't chase something because you're afraid you're going to miss it. Focus on maximizing winners, not minimizing losses. Again, something that's very hard for people to do if you're coming from a constant state of fear. That's the best I can summarize it in terms of an outline structure of what you're supposed to be doing. Are there any questions? Well, I ended up running 10 minutes over anyhow. Are there any questions? Three-legged stool, great event to go back and watch if you haven't seen it, so I'm not going to talk about it here. If you wish to day trade and you do not have the $25,000 needed, there is a way that you can do it safe, legit. You can be trading in 48 hours if you want to be, and doing whatever you want to do. You're not following levels or plans or anything else. You can, if you want to lose your money, you can lose it. You need $5,000 to start, and you can have 10-to-1 buying power. So email me if you are in that category. I don't want anybody doing this that can't afford to do it, but I mean, if you have money tied up somewhere and it's something that makes sense to you, then email me and I will send you the information about this. This is not through DTS. I want to make this clear. It's through a place that I have been familiar with for a long time, and they're 100% great ratings, or I wouldn't recommend them to you, of course. Personal trading question? Sure, Gary. I don't know about you or about me. I'm not sure what you mean. You can ask me, you can email me, whatever you want to do. You don't need 56. You don't need anything. You don't need anything. All you need to do, when you go to this place through me, because you come through me, that's all that they need, because they're worried about somebody just being stupid, and they assume that if I'm sending you that you're not. So all you need to do is talk to the guy there. His name is Richard. Ask all the questions you want, feel comfortable with what you're doing, and you can be trading in 48 hours. Just paperwork time is all that it is. Again, I'm not saying that you necessarily want to be trading. Maybe you're just going to lose the money you put up. But I'm saying you can be. If you know what you're doing and you want to do it, that's great. And also it's not a huge, I don't want to make a huge deal out of it, but you can take, it's called prop trading, the prop trading setup. You can also combine it with the seminar program at DTS if you want to do that. But I don't require you to. If you want to go, trade, and if you think you can make money, great. But there also is a little bit of a cohesive deal that if you do want to do that, it'll be on the information that you get. Okay. That sounds like a big event property. No, Gary, my story was fairly simple. I actually never was a lawyer. I did go to law school, and I did pass the bar. That wasn't the problem. It just at the time I became a lawyer, I worked my way through law school at a job where it was better than being a lawyer, kind of. So I just never became a lawyer. And then I opened my own business and I sold my business. And I was just in a spot, Gary, where I had some money because I sold this business, but not really to retire. And I was really young. I was like early 30s, so I didn't know what to do. And anybody know who actually got me involved in the market? It was Wade Crook, who this was back at a time where anybody talking about trading, invest in the market on your own it was a very new concept, sort of. And he was this option guy. And what it did was it got me interested in the market because I knew nothing about the market. I had some stock at a company I was with, but I mean, other than I never bought or sold stock. I knew nothing about the market at all. And he actually said something. It's just, one of those one-line sentences that sticks out to you. I just remember him saying, stocks, if a stock goes up 10% in a year, people consider that a great return, right? And he said, you realize that most stocks go up and down 10% every week or 10 days. So why sit there all year? Why, and just what he said made a lot of sense to me. And it kind of clicked with me in a way. And I went to his thing, it's a free event you go to. And I never gave him a penny because I felt like, this is back in the days where there's this huge room filled with people, like 80 people in a seminar room, and he does a sales pitch, and everybody runs to the back table. They're tripping over each other to get back and pay money to this guy. And I felt like just I still had common sense back then, and I felt like sheep being herded by the ranch dogs or something. So, but it got me interested, and I went and I started studying options, and I had the time because I had some money to just kind of play around with it for a while. And I was self-taught on options, which you can do because options is just math. But then I was trying to self-teach myself charts. And back as I was with Pristine for many years. Well, back then I had Pristine on my computer. I looked at him and said, "No, I'll figure this out." And about 3 months into it, I had a fairly good amount of money involved in some option trades on oil stocks, and I was underwater. It came this Friday where the charts all flipped around, and I was kind of back to even, and I had to make this decision what to do. I was in this trade because I thought it would go my direction. It went the wrong way. Now I'm at even. Do I get out? And I sat there looking at the charts, Gary, and I was this Gary. Yeah, and you know what? I realized I didn't know what I was doing. I pretended I knew what I was doing, but when the pressure was on, I didn't know what I was looking at. I really didn't. So I called up and paid for a seminar the next Monday just without even asking a question. I just did. And by the way, what I learned back then was nothing. And when you think about what I learned, the total education I started with was nothing. I mean, nothing compared to what I teach now. So much stuff I just went out and really self-taught for the most part. Just learned and did things and realized, hey, that doesn't really work that well. But it was just that little bit of foundation that got me going. So that's my story. That's it, and been with it ever since. Any other questions? All right. Thanks. All right, guys. Have a good night.